What's up, guys? It's Rob here, and we need to talk about Vinco Ventures stock, ticker symbol BBIG, because this stock has been getting a lot of attention lately and has been doing very well. And there are actually some interesting statistics that I don't think a lot of people are thinking about right now. So let's take a look at the chart. We can see this stock has been doing not great as of late, right? They were at $9.53 around open yesterday, and now they're sitting around $7.29. However, this is still very impressive considering the fact that just 10 days ago, they were at $2.17 and have since made highs of $11.90. So this is actually not that bad considering, it's not that large of a drop. It's not even the lowest they've been to since they have had this massive rally, right? They dipped to around $6 and, are still up significantly from that point. So what's going on with Vinco Ventures? Well, Vinco Ventures, ticker symbol BBIG, has been part of a recent attempted short squeeze, right? A lot of people on Reddit and Wall Street Bets have been attempting to short squeeze this thing into the stratosphere. They're trying to pump this thing up and get a lot of buyers in on it so that they can squeeze out some hedge funds who have been shorting it and potentially gamma squeeze them as well. Now, I'm going to discuss the feasibility of both of these things. And I think that one is potentially a much more realistic option than the other, because if you look at the statistics for Vinco Ventures right here, you can see that the percent of float shorted is 22.55%, which, isn't incredibly low, but it's not as incredibly high as a lot of other stocks that have high float percent shorted. For instance, support.com has a float percent short of around 60 something percent. So this is basically nothing compared to that. However, it is a significant percentage of the float to be shorted. And what's worth noting is that the market cap on this is only $487 million, even after their large run up. Now, this could actually provide some issue for them, short squeeze wise, right? Because if the market cap is only $487 million and only 22% of that is shorted, that means that about 80 million, maybe 90 million dollars worth of short positions are out there. Now, in order for a short squeeze to take effect, right, institutions, whoever's shorting really, is going to have to buy the stock. They're going to have to try to close their short positions, and they'll do that for one of two reasons. The first reason they'll do that is because they're scared and they're worried that the price is going to run up even more. And the second reason, and the more compelling reason, the actual reason that shorts get squeezed per se, is because they are margin called out of their positions when those short positions end up being so much of a loss for them on paper that the brokerage accounts that those institutions deal with who are shorting are forced to close because they can no longer sustain the position based off of their account size. And that's what actually causes real short squeezes, when they have to buy back their positions, even though they know, hey, the stock, it's probably going to start plummeting after we do this, but we have no other choice, right? Our brokerages are forcing us to. So that is potentially going to be difficult for BBIG because they're their market cap is only 487 million and only 22% of that is shorted. So that's actually a relatively small amount, right? Especially considering institutions have billions of dollars typically. So if only $90 million worth of short positions are out there, those are probably split up between many institutions. Maybe each one of them only has like 10 or $20 million worth of a short position. And this stock would actually need to rise quite a bit and get very high before those institutions are then margin called. So as for a short squeeze, I'm not so sure about the feasibility of this. However, that could come into play later if a gamma squeeze actually ends up going through. Now, a gamma squeeze is when, I'll explain it like this. You see, there are a bunch of options contracts, right? These are calls. A lot of you may have purchased or sold calls in the past. Options trading on Robinhood is very popular. So you can see right here, this is the open interest bar right here. You can see all of these numbers are essentially open interest call options. And what that means is these are all call options that people have bought and are holding currently, right? So someone has entered into an agreement to sell these shares if the price of this stock is, let's say, $8 by September 10th. That's what this is an agreement for, right? 1,400 of those contracts are out there. Now, the more of these contracts that are out there, the more of an obligation people who have sold these contracts have to actually own the underlying stock as collateral. Because if this stock is $8 per share, then they're going to have to sell those shares for $8 and to whoever's holding the contract. So the more of these contracts, the more buying pressure there is for the stock, especially as the stock price rises. Because if this stock is, currently it's sitting at $7.30, but if it actually goes to, let's say, $10, then all of these options, open interest options, would be in the money. And those institutions would then have to have the shares available to give to these investors if this stock actually ends up being $10 still by September 10th. So that's what a gamma squeeze is. And what's very interesting about this is you can see, the open interest on these is about $1,400 for the $8 calls, $2,100 for the $8.5 calls, $6,400 for the $9 calls. Now, these numbers are fairly large. However, when you actually look at September 17th, these numbers get a whole lot larger. There are 40,000 open interest $7.5 option calls, $24,009 option calls, 36,000 $10 option calls, 31,011, and it just goes on and on all the way to $20 where there are 46,000 open interest option calls. So this could really end up being a big gamma squeeze if this stock runs up enough, right? And you're going to have to see this stock close fairly high, probably above $10 on one of these days to actually force these institutions to start having to cover their options positions. I believe they would have to probably close above 10 on one of these days relatively soon, right? Because this is September 17th, so it's actually coming up. You can see in just 2 weeks from today, 2 Fridays from now, those options are going to expire. And the higher we can get this, the more likely it is that institutions are going to have to buy more of these shares to cover their position, which could actually raise the price. And if we get it high enough, that could actually turn this short squeeze into a more viable play, right? Because right now the market cap is rather low, but if we get this thing to, maybe 10x, then potentially some of the smaller institutions who are shorting would have to cover their short positions, and that could actually be a potential catalyst for a short squeeze. However, at the moment, short squeeze doesn't look too likely to me. It's really the gamma squeeze that shows a lot of potential. Now, it's worth noting that none of this is guaranteed, right? We have seen big pump ups in the past. We went from $1.11 to $9.33. And then, that didn't turn into much of anything. It just lasted for a day and we faded away. Now, it looks as if we've done something kind of similar, right? Because we did go up to $11.19 and now we have faded to $7.39. However, there are still so many open interest options calls that I am holding out a little bit of hope. And I'm not saying that I would go all in on Vinco Ventures, because it is pretty risky, but it might be worth having a little bit of money in on the sidelines, only if you have enough to throw in on these, essentially gamble plays, right? Because a lot of these, if you are involved in them, like AMC, GME, Support.com, Vinco Ventures, if you're in on these, there's a big potential for a large gain, but oftentimes, we only hear about the successful ones, right? There are a lot of these that end up failing and, they just pump up for a day and then crash. So it's not guaranteed by any means that these are going to become successful, and you oftentimes end up losing money on them if you get involved. However, there is a lot of potential to make a lot of money as well. So that's what I have for you guys today. If you've enjoyed this video, please consider liking, commenting, and subscribing. I would really appreciate it. No pressure to do that if you don't want to, but if you enjoy this kind of content, then consider subscribing to the channel. So without anything else to say, I'll see you guys in the next one. Have a great day.